Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Tuesday, November 8th, 2022. Another sell-off following the 2 to 3 week sell signal last week below the 215.87 formation. We may today actually test 188.35. I'll show that in a moment. 197 even is still a soft intraday pivot point, and I'll show that too. Before I do that, just want to encourage you to please click like each and every time you watch any Wicked Stocks material that is uploaded to its YouTube channel, including and especially the Daily Tesla Report. It helps us out a great deal in being found on YouTube. Also, we're doing the Daily Apple Report on a day-to-day basis through November. And subscribe. If you haven't already, please subscribe to the Wicked Stocks YouTube channel. You'll be apprised of notification each and every time new content has been uploaded for your viewing. And if you would, share the material with friends and colleagues. So I'm going to stick with this chart here and just remind you that last Wednesday's closing back below this descending channel top, that was a setup for a meaningful 2 to 3 week buy signal at the time into the mid 260s. About a week earlier, we closed above this descending channel top, and that was a 2 to 3 week buy signal. Having closed last Wednesday, a week ago tomorrow, back below that formation, basically Tesla was saying not so fast. And in fact, headed for lower price activity as we move into later November. That's what's playing out. The 173.03 to 181.43 area, this band of channel support you can see down here in the support and resistance area, expected as a 2 to 3 week target. I could say 1 to 2 weeks now, given the fact that we're a full week now into that sell signal. By the way, this newsletter is free and downloadable on, you can see the link actually right underneath our video here on YouTube. And you can click on any of these charts. It'll take you to the respective area. On the way down today, 197 even. We broke below it just a bit yesterday. We settled just above it, 197 even. If you really comb through the daily chart, and do I have it here? Yes, I do. You can go back. Now these lines, this is a low from, looks like March, maybe early April. I don't have the exact location, but it was a meaningful pullback low here. And it did roughly contain yesterday's, that is Monday's low. You know, I comb charts and I look for all this stuff, these old lows, line studies, Fibonacci's, speed lines, channels, you name it, all in pursuit of trend defining levels, also just day tradable levels. So it still looks roughly the same. 197 even is our intraday pivot point, above which we can rally back into the 204.99 to 206.85 area, which I'm now once again calling a range of resistance. 206.85 is the May low. 204.99 is shown here on this chart. That is the low settlement price from earlier on October, and no longer the low settlement price. We are now below it for the first time since posting that low settlement price about 3 weeks ago. And so it is a ceiling in and of itself, 204.99 to 206.85, almost 2 points wide, able to contain daily buying pressures, and below which we remain heavy through the rest of the week. In fact, we're heavy, obviously, into later November below this 215.87 formation, which I showed at the top of this video. If we break 197 even today, we probably will test 188.35, and that is nothing more than a trend line off these lows, of which that channel top is in part based, but it's nothing more than a trend line off these lows from earlier in October. 188.35 in reach if we break 197 even. 188.35 able to contain session weakness. All of the minor points are carefully chosen, just so you know. If you're an aggressive day trader and you trade more than once a day, if it's beyond just the trade of the day, but you trade throughout the day, just know that these levels are all carefully chosen for your convenience. 188.35, able to contain session weakness. And if we close below 188.35, we should tomorrow reach our 2 to 3 week objective inside of a week. In between the 173.03 to 181.43 area, this band of channel support, able to contain selling through the rest of the year and quite possibly through Q1 of next. And I'm also going to show on the weekly chart how it is. This is weekly, so these numbers are a little different on the weekly chart, but how it's in close correlation now, increasingly, with the long-term 5/8 downside Fibonacci, AB in this chart, A being the 2020 March 2020 COVID low, B being the all-time high from last November. We are now a full year into this and continued lows playing out. And I do think that this 172.94 to 181.05 area, slightly different levels on the weekly chart, well equipped to contain selling through Q1 of next year, possibly well into next year. And I'm just going to leave the downside at that. Let's talk upside today. That if we do happen to push, this is a good chart here. If we happen to push back above 206.85, 215.87 is there. I don't anticipate seeing that. I think on the way up, you need to respect 211.71. 211.71 just might snag the balance of the daily buying pressures that could play out above 206.85. If we push through to 11.71, 215.87, yes, becomes an intraday objective where we can top out for the week, and once again below which that 173.03 to 181.43 area in reach then within over the next 2 to 3 weeks. Now, if we do close above 215.87, are we back to expecting the mid 260s within 2 to 3 weeks? No. I mean, it may well play out, but I need to see us then settle above 236.43. And that is a new level that I haven't shown here on the chart, but I will. If we come off of this low area here and start pushing higher over the next few days, I will show it. It is a meaningful upward pivot point through the balance of November trade and into December. So it is stair-step, FYI. Closing above 215.87 would neutralize the 2 to 3 week sell signal from last Wednesday. And with that, yes, I would anticipate within a full week of trade, probably 3 to 5 days, 236.43, which can also contain weekly buying pressures and is the level to settle above for then clearly indicating that 264.19 former channel bottom within another week or two, where Tesla can top out through the rest of the year. But I don't want to get too far ahead of myself here. That scenario is pretty remote at this point in time. I'll leave you with this. We remain heavy into later November, below 215.87, anticipating the 173.03 to 181.43 area as a 2 to 3 week objective. And if we close today below 188.35, we will likely test this zone tomorrow. And that is all I have for today's Daily Tesla Report. Please click like if you haven't already. I'll be back tomorrow with Wednesday's Tesla Report, and you have a great evening.